When it comes to owning a family business, there's not really a job description that comes with that job title. And there's a lot of responsibility on the other hand that comes with it because you're providing for you, your family, and not only that, but your employees. So especially now more than ever, it's important to think about how do you recession-proof your business and how could you utilize whole life insurance to do so? Whether you have an existing whole life insurance from 20, 30 years ago that's been accumulating cash value, or you're considering how you could utilize whole life insurance in your business now and moving forward to put you in a more secure financial position. There are a few key components to whole life insurance that make it perfect for setting up your small family business for a recession. Today, we're going to talk about how to set yourself up to recession-proof your business using a whole life insurance policy. Hi, I'm Olivia Kirk.
I'm Tim Yurek. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
When it comes to owning a small business, there's not necessarily a job description that comes with a job title, but there certainly is a lot of responsibility that comes with a job title, specifically in times of economic hardship. Recently, it seems like people are throwing around the word recession more and more. So you may be wondering, how do I help set my business up for this recession so I could take advantage of opportunities and not become even more pinched when the economy is down?
82% of all business failures are due to poor cash flow management, according to a U.S. bank study. And when you think about it, that makes sense because we always say it's not what you buy, it's how you pay for it that is going to have the impact on your business. And the reality is, we have been trained by banks, large corporations, our vendors, the government, to use our money in a way that is detrimental to us, but beneficial to them. Mm-hmm. So if we could sort of unlearn that process and relearn a process that puts us in control and redirects the flow of money not away from us, but redirects it back to us, now all of a sudden we have an unfair advantage against our competition and against our peers.
Well, this makes a lot of sense, especially because, you think about it, a lot of times people look at whole life insurance and think of it as an expense, a bill, a way they're using their money that's leaving them out of control. But on the contrary, we're building up the cash value in the whole life insurance. The way we design these policies is for that cash value accumulation, and that stands true for, old whole life policies as well that have been in effect for 20, 30 years. They have that guaranteed cash value growth component that you're able to tap into on a guaranteed basis, right? So we have the guaranteed loan provision, and we have that guaranteed cash value growth. Plus, in a lot of cases, we have the dividends accumulating as well. And with all of those things, we're able to tap into that whole life insurance. And in a way, it allows us to recession-proof our business because we're able to get our hands on that money with no questions asked, no credit checks asked, and no repayment schedule that's required.
Yeah, and the key here is this. What's going to be the first thing that gets dried up or goes away if there is a recession?
Simple. Access to capital.
Right. What are banks going to do? First thing they're going to do is they're going to pull in their reins and they're going to reduce our access to capital. You don't have to take our word for it. Let's just look back historically what happened. In 2008, during the financial crisis, the first things banks did was they froze your credit lines, whether it was a home equity line of credit or a business line. They just said, okay, you can't tap into it anymore. That was the first step. The second step was they turned around and they said, okay, your outstanding loan balance, you're paying interest only. Now, we want you to make principal and interest payments. And if you don't like it, go find a different banking relationship. And that's literally what happened. So again, the first thing that's going to dry up is access to capital. Now, knowing that in advance, doesn't it make sense to sort of recession-proof your business by setting up your own pool of capital that you could tap into when you want, no questions asked, and actually for whatever you want? Nobody's going to ask you, oh, what do you want this money for? You call the insurance company. Your right for a loan is a contractual guarantee. So you are not asking permission or seeking approval. You're giving an order to get your money when you want. That puts you in control. And that's what we advocate. We look for opportunities or processes to keep our clients in control of their money and their cash flow at all times.
Now, the cool part about using policy loans is not only do you have guaranteed access through the loan provision, but you're not actually borrowing money from your whole life policy. You're borrowing money against it. So what that looks like is a collateralized loan. So you have cash value that's accumulated within your policy, and the insurance company places a lien against that and gives you that cash via a loan. And what that means for you specifically is this pile of cash, this private pool of capital that you've worked to grow, continues to grow as if you hadn't touched it because you didn't. There's just a lien against it, right? So you're still earning that guaranteed growth. You're still earning dividends as they relate to your policy. And if there's still money in there or you're paying back, that increases the amount you're able to borrow the next time.
Yeah, that's a cool thing, right? So as you are paying, you have your loan balance, and then you have the equity that's available. And every payment you make reduces the loan balance and simultaneously increases the equity that's available. So think about it. If you're making a $500 per month payment on your loan, the loan balance reduces by $500. The equity from which you can borrow against increases by $500. And literally, if you wanted to, the next day after you made the loan payment, call the insurance company and say, hey, boys, I underestimated my need for cash flow this month. I need to get that $500. They're going to call you back. They're going to tell you, hey, where do you want us to send it? Do you want a check in the mail or do you want us to ACH the money to your checking account?
Yeah, it's a cool thing, especially when you think about, if you're paying back a loan, let's say on your mortgage, as you give that money to the bank, in order to get your hands on it again, you have to go and ask permission, which isn't the case with the life insurance policy loan. And it's a huge distinction and it's a huge advantage that you have when you're using life insurance policy loans. And like we talked about earlier with the recessions, if you use a bank for the line of credit, you may have access to that capital today with a free line of credit. But tomorrow they may decide no more access to money for you. And then you're in a pickle because now you're under their terms. So it's not the case with insurance policies, and it's really an advantage of using them.
Yeah. And here's a key point. You brought up a good point, Olivia, because you could be the best customer of the bank. You could be never missed a payment, always made your payments on time, all of those things. But because of things outside your control, stuff that's going on in the economy or the way the bank is perceiving what's going on in the economy, they make a decision that puts you at their mercy, and all of a sudden they freeze your credit line or they pull your credit line or they term out your credit line. And these are the things that we try to explain to our clients. You've got to be prepared not only in good times, but also in bad. I've said this before on our show, but it's so true. A banker is somebody that will sell you an umbrella when it's sunny and then take it back when it starts to rain. And we have seen this time and time again historically over my career. Whatever's going on out in the economy, the bank holds us accountable for it. And that's not right.
If you'd like to learn more about putting this concept to work for your life, your business, and your family, check out our website at tier1capital.com. Hop on our calendar using the Schedule Your Free Strategy Session button today. Also, if you like this video, be sure to give us a thumbs up and check out these two. We picked them out special for you.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep. That really matters. We'll see you in the next one.